Traders, in this video I'm going to show you a scalping slash day trading strategy. We're looking at the US100, the NAS100, 5-minute chart on the right, 1 hour chart on the left. Bottom line is we're looking for these alerts to fire when we see a green bar under here. We can take these trades, these green alerts, and a stronger signal or a better setup would be if this multi-time frame, higher time frame indicator down here gave us the majority of these bars green as well. Okay, so this signal here isn't as strong as it could be, given that we have these red bars under here. Nevertheless, this one will trump everything. So it's a higher risk, given that we don't have a confluence with these this indicator down here, but we can look to take these trades. You take the dot at the level of the dot, so you would buy right there on the next candle. You wait for the next candle. Always wait for the next candle to form after the dot, and you want to come in around the level of the dot or thereabouts. So that's basically it. We go back and we look for these signals, and if we're green signals with green under, we buy. If they're red signals with red under, we buy. We sell. Right, so let's just go that one step further with this. We'll go to the next level. You want to refer back to the higher time frame. We're interested in this section of the chart here, but what you want to do is you want to have a look at the 1H, and ideally, well, in this case we have a higher low, change in character of the trend, potential, didn't quite give us a break of market structure, but you want to see a shift in a trend, in this example from, say, red into green. But look at this trend here, this trend here. All right, well, we can see that we have clearly, if we pull this line through here, a shift in the trend here. Another thing that we have here is, if you see a double bottom with a spike below, that's generally a sign that this is going to push off. Double bottoms build liquidity with resting stops under here, and that's a stop run. So you can choose to take this trade based on this if you want to. It's risky, but we've got the green light under, so you would buy here. And we'll go back and have a look at a few more of these. Stop loss under, see this yellow line? This yellow line here is a daily high or low, previous daily high or low. So your stop loss would go slightly under, and see how it spiked down to the pip, right to this level here. So there's your buy, and then you can wait for this to gain a bit of ground and then pull your stop loss up to better than break even, and I mean the rest that's a huge payout if you trade this well. And you can stay in this trade. See how these bars are green here? Stay in it while you see green bars, and you could exit on the first red bar if you want to. First red bar kicks in, well, we get this white bar, that could be your exit. Trades back into the cloud, that could be your exit. Take profit on these red dots and trail the stop loss in the cloud. Use this cloud here. Use these green dots as a level for your stop loss, right? So you could work out whether you want to go at the green dot, in the middle of this cloud, slightly under the midline of this cloud, okay? You also have this line here. That can be your stop loss level. Just follow that line. And I mean, you can see it's pretty good up until here. You get taken out here. Okay, so we go back and we have a look. See, you don't take this trade because we don't have the confirmation under. You want to see a red bar, or at least the majority of these red. That's okay. So see how we've got, it's 50%. So you could work out whether you want to take the risk or not. But I mean, that would have been a nice outcome. Let's just wait for an ideal setup. This is what you want. In fact, we'll go back a bit further. Let's take it back up to this point up in here, because what's happening is the alert is going to fire on the 5-minute chart, right? So this is your point of interest where the alert fires right there. Now what you want to do when this alert goes off is you want to come in to the hourly chart, and you want to see what price is doing here. Think of it this way. The opportunity you want is going to be in a bearish trend here. Right, let's just draw now a bearish trend, right? Expansion, retrace. You want this opportunity. That's what you're looking for. And our indicators are going to give you that. That's our point of interest. So you want to make sure that, see these lines here, see how they're trending down, see how we got a break out of the cloud on the daily time frame, on the 1 hour time frame. You want the 1H to be trading from green into the cloud, changing from green, white to red. And then you want to see the this trend line here heading in that direction. We're missing something. I'm just going to bring it on. Bear with me for a sec. We are missing this guy, the midline, the mean. So you want the opportunity when this is trending like this on the hourly time frame. So with this being our point of interest, then we're going to be looking for any pullback. Good luck. I mean, it traded off, but keep an eye on the cloud and go for any retrace back into the mean, any retrace back into the cloud, or this is the mean, this line here. Okay, any pull back into the mean. So you could pull a Fibonacci from here to here. The pull back into the mean, go into 50 to 618. So there's an entry there, short position. Simply put, this stop can go halfway through the cloud here, and you go for a minimum of 1 to 2 risk reward. And the other thing you're going to be looking out for here is any red dot. Now you might have had a red dot on a 3-minute chart, so you can open a 3-minute chart and see if there's a red dot up here. So you would take that trade short. But you're always looking for the retrace. I mean, you can see it here. Expands, retraces, expands, retraces. So you want to get in on the retrace, but keep an eye on, this is not such a great example here on the 1H because it sort of just traded off. But consider, as I showed you earlier, like in a picture perfect trend, this retracement on the 1 hour time frame, and then your entry point's going to be on this time frame. So see this red break here? Well, that pullback, you would have had a dot probably on the 3-minute chart. So you can open the 3-minute and take that trade. And if you missed it, then look where the break is here. Find where there was some kind of a swing. Now you can mark up your swings like this. Okay, that point there, the retrace, grab your Fibonacci, pull it from the swing high to swing low. See the 50%? Well, there's your entry point right there. You can set up a limit sell if you want to. Pull the stop loss midway into the cloud, go 2R, and away you go. Right, now, depending on how you read this and if you're sitting in front of your chart, but you can take every one of these swings. See, you just draw your price swing. There's your high, low. I'll show you what I mean. Just follow this trend while it's trending like this. See the 1H? See how it's heading south like this? Well, you're going to follow it on the 5M. But you're going to be looking for these swings like swing high, swing low, mark it up, swing high, swing low, swing high, swing low. Look at the swings, and always go for swing high, swing low, 50%, well, at 61.8 to 50%. And that will generally work out well. Okay, stop loss midway into the cloud. Okay, that kept you out of trouble. You see what I'm getting at? Here's another break. Mark up your swings. And while this is trending over here, you milk this for everything it's worth. Okay, mark your swings. It's really quite easy. Just look for the swing high. Well, there's a swing low. There's a swing high. Swing, no, that's behind. Swing low. There's another entry point. Swing, retrace, stop in the cloud, 1 to 2R. Something like that. Now at some stage you'll get caught out, but generally, when it's trending like this, you've had so many opportunities, you've built your positions, and I mean, look, you can bail, you can exit your positions if it trades into the cloud. Trades into the cloud, you can bail. So if that's an entry, this swing high to swing low, if this is an entry here, short position right, say there, and your stop loss is up, in the cloud here. As soon as you see this trading up, we get a white bar, a green bar. You can call it quits right there if you want to, or just run with the stop loss and be done with it. Let it get taken out, because you've had, how many of these have you had running to 2R to 2, 1 to 2 risk reward, 5 or 6 trades, or even, they might even still be running, and then you close your basket of trades here. But that's how you could work these trends. And while you've got a red bar under, you're always going to be looking for that opportunity. Here's another one, the red break right there. Swing high, swing low, retrace. Grab the fib if you need to, high to low. Set up your entry on the 50 to 618 and follow it. Follow this strategy. Stop loss, well, you get slightly above the cloud there, and then that's a nice outcome. Look at that. And I mean, depending on how well you read that, you can just sit with this. If you're in front of the chart, see, there's your swing high, there's swing low, there's the pullback into the 50 right there. So you can work this and build your positions. Pullbacks here, you would have got an entry. Pullbacks down in here, you could have got an entry. And then eventually you get taken out. But you see it trading into the cloud. Or if you see it, a green candle, you could bail on the first green candle if you like, and that'll reduce your risk. So let's just have a look. Let's say let's say that swing down here, let's say that was your entry point. Stop in the cloud, you went for your whatever. See, as soon as this trades back and you see a green candle, you can bail if you want to, and there you are. You can bail at break even or better in this case. 5-minute chart, you could be sitting in front of the chart. If you've entered this, you've only got half an hour, you know what I mean? Like, you could be in front of the chart for a couple of hours and set up a couple of these, or sit in front of it all day if you want to. But that's what you want to look for. But yeah, main thing is the red dot or the red triangle gets you in as long as there's a red bar and these are red under here. But generally this red bar is the boss, and if you see that, take the trade. More often than not, you're going to come out on top. Now we've got green bars over here now. So by the way, guys, look, you can jump on board with us. We've got a 30-day free trial. It will cost you $0. Look at this opportunity here. It's a no-brainer. I mean, you don't even have to use the 1 hour time frame if you don't want to. You've got everything on this chart. These indicated down here is giving you the 1 hour, 2, 4, and daily green. We've got these green bars. Take any one of these trades. Trade it on the dot, on the next candle. Come in here if you like. Or the pullback. If you're a little bit nervous, wait until you start to see higher lows. They're starting to trend up like that. This is your break. This is your changing character. Well, not really. This one here was a break of structure. Happened up in here. So I don't call that a break of structure as such. We just call it cloud break 2, but generally that'll be a BOS, and generally this is a changing character. But like you've got the midline, you can see the break above the midline, you see green candles coming into play here, you see this starting to rotate. Anyway guys, jump on board and give this a shot for 30 days. We've also got the Telegram signals, the website tradingwithanthony.com, join VIP here, and here it is. Just absolutely no cost whatsoever, 0 risk, and you have everything to gain. Really good value. This is a PayPal subscription, but you don't get billed in the beginning. It just sets up the subscription to bill you in 30 days. And for whatever reason, if this isn't for you, you can cancel. So guys, with that, join us on this journey and enjoy the ride. Hope you have a great day. Safe trading. See you in the next one.